What's up, everybody? How you guys doing? I like the consolidated bars. I don't know what you're talking about. That reminds me, what the fuck is 52, 62, 64? Are you talking about the Gerk's Wiener indicator? This thing? Yeah? Oh, okay. It's been accurate. I went to a New York style pizza shop that was ultimately disappointing. Was it in New York? I feel like it wasn't. Because in New York, we don't say New York style pizza, we just say pizza. No, in Australia, it was probably shit. Did they put corn on it? The British like to put corn on their pizza. Can we kick things off with a little Fubo talk to get me warmed up for the week? Hmm. Corn. Yeah, corn. Corn, pineapple. An American reviewed it as awful. Probably was. Instead of sauce, they used Vegemite. That's disgusting. Fubo, huh? I like where Fubo ended the week. I don't like what's going on with Fubo's liquidity. Here's a couple problems I have with Fubo right now. Ooh, we get to use our cool data. Hold on. So my biggest problems with oh, nope, not that. This. There we go. My biggest problem with Fubo right now is like Gamma Max has moved back above spot. And it was like really cool when Gamma Max, like the Gamma Max is trending up, but dealer delta is falling off. It fell from like 33.3 million to 28 million on Friday. So about 5 million in options fell off the chain. Now, some of that might be exercised, which would be cool, but massive drop in Gamma. Gamma went down by almost 50%. So, not super bullish, right? Liquidity is starting to flatten out. So, there's at least some shorting going on, or some interest is starting to dry up. I like that it's still above $2. Maybe it'll stay here a while, but I don't think it's particularly great that it hasn't moved higher yet. And Atomic keeps selling just shitloads of calls at $2. I will say, however, though, it is still in a position where it could run. Um, and maybe we'll see a little bit more movement as we get closer to like the ETF FTDs, right? Maybe. Like the options chain doesn't look terrible. There's still a decent amount of positive gamma out at like 250 and 3. And some of that some of that gamma that fell off was not so positively weighted. And, Vega's a little bit of Vega exposure picks up on that move as well, which would be nice. Some of those out of the money options, specifically like $3, $4, $5, $7, are very long dated. So yeah, I mean it's got everything it needs to move higher, but if it slips $2, it's fucked. So hard to get over that support. It's kind of an issue. What are the ETF FTDs? The ETF FTD period's usually like right around the beginning of the month. I could see where the fuck did Carl post it? You put it in here? Ah, there it is. Looks like Fubo ETF FTDs peak around. Ugh, God, they look gross. Like August 30th through September 5th. There's a little bit of pressure there, but not a lot. That's definitely not very impressive. GME is like kind of interesting from the 30th out through the 4th. Those aren't too bad. Although GME is a lot more liquid now. Upstart doesn't look all that impressive. Neither does Beyond. Finally catching a Sunday stream live. Nice. Good morning from beautiful San Diego. Traveling for Diego? Traveling for work this weekend and enjoying the stream from the beach. Alright. Nice. I'm making pork steaks to show Dork how inferior chops are tonight. What the fuck is a pork steak? Gross. Whatever makes you happy. What's up, Sisyphus? I had two ads right when you said GME doesn't look bad. I mean, it doesn't look bad prior to them selling fucking 75 million shares. Nowadays, though, it's hard to say. The biggest problem with GME running again is no one's really been shorting it all that hard. Like, it's accumulated some short positioning, and like obviously Vol's gotten just shit on, right? But it's like no one cares anymore. Like realized Vol and Vol are both just crushed right now. I think like IV30 is down around like 71, which is super fucking low. Um that's almost as low as it was like prior to DFV coming back. What's up with BNED? It just keeps climbing. Yeah, it's kind of aggravating. It's going up right now. Might go up a bit more. I would like it to come down. I'm gonna probably have to wait for them to miss some earnings though. So maybe end of this year, early next year, when they're seasonally not performing well. What's on UNH? 830 600C seemed interesting. Do you expect offensives to do really well? I don't I don't hate the idea. I'm just kind of wondering. Like gamma max on UNH is at like 600, so you're you're kind of it's a little tight. Yeah. Let's see how it's been picking up a little bit of gamma. This isn't generally one that's like super driven by its options flows, but it looks like there's some decent interest out to like 600, 605. That's not too bad. Looks like it's a little bit longer dated too. Decent chunk of positioning out on the leap, and like August 25 seems to have some. Good amount out on the 2026 leap too. A lot of positioning for October. October through December, Jan. 600's around $1. I felt the DJing calling. I mean, if they're still priced there, that's not probably that bad of a gamble. My only concern is like if rates don't get cut and tech overperforms, like UNH is gonna do really shitty again. Jan 600s are $31. What were you thinking, like weeklies? You're a fucking degenerate. It's AMD. Um, AMD still has some out of the money interest. It would suit it to break above 160. There's quite a lot of sold calls at 160 since the last test. Could go take a little bit of a peek at it. Yeah, so I don't particularly like the range it's in. I'm not sure it will outperform if Nvidia does with Nvidia's earnings. And then this range is pretty weak. 5500, like 155 is support and 150. Below that there's nothing. So if it loses 150, it's probably going to fail. And right now it's currently below 155 still, and kind of seems to be having some trouble regaining even that level. I've got some underwater leaps I'm gonna have to make a decision on. GoEV looks really boring. How underwater are your leaps? Are they like this? Are they like CSPs? Usually, what do you have? Jan 250s. So you're a bit far out of the money, which is problematic. Just long the stock. I like CSPs on it a lot better than just going long, but if they're Jan 2025, you probably don't need to make any kind of actual decision until they're like 90 days to expiry. So you might get a better exit on them. I don't know if you're gonna get them back in the money again. I'm assuming you bought them back when it was at like $2. Like here or here. Just below 2. Yeah, you could roll out to 2026. I still think there's like a significant advantage in either being synthetic long or just focusing on CSPs on this, unless it gets above $3, in which case going long might be interesting. I don't really know if I'd want to be long down here. You know what? Maybe I can't talk shit. I have $1.50 calls, so I was synth long, and then I got assigned on CSPs. So okay, you were synth long at 250. You got assigned on Leap CSPs, or did you have shorter dated CSPs? We can oof. That'd be fucking awesome. I saw August monthlies. Okay. Well, you can always sell covered calls to get rid of those. Maybe that'll pad off some of your losses on the roll. Or if you roll, you can sell covered calls above your leap position so you can claw back some premium. I still want to at $1.50. That's fair. Their last quarter was pretty good. They're still getting a lot of money from people for doing nothing. The CEO's penchant for private jet flights hasn't diminished at all. And as far as I know, they still don't make vehicles, so it could be some time before anything positive comes out of it. I'm still selling CSPs on it because the yields are fucking absurd, but so far I haven't gotten assigned on anything. Sounds like Mullen. Yeah. There's some similarities. A little less scammy. And they actually do have some government funding. But not too dissimilar in that they're like an EV wannabe. I like the space that GoEV is trying for, and I think due to institutional interests, they may actually just have to become a decent company at some point. Or at least make vehicles, right? Which is all they need to do. They've already got contracts. They've got like $1 billion in revenue contracted out. They just don't make cars. Any thoughts on Upstart's puts for October? Upstart puts for October, December, 35 to 50 range. Appreciate it. I wouldn't have any. I probably wouldn't have any interest in getting puts on Upstart at $50, but I bought some. I bought some 40 and 35s last week. It's still kind of pushing up. The rate cut thing is bullish for them, so it really depends on how far the market's going to lean into the promise of cuts, and then it'll also depend heavily on what kind of cuts we get at the September meeting, if any, right? If we don't get rate cuts, I mean, that's not going to be good for Upstart. Even if we get rapid rate cuts, financial conditions are going to tighten harder than they've tightened in the last 2 years. Is the triple 3M play? No, that's not dead. I'm still selling calls on that. It hasn't built up any interest like out of the money. It's like the 130 position that was there is still there. It's climbed up a little bit and breath has lifted, but I don't really think it's gonna hold this forever. This is really similar to like ABBV, and that it doesn't have like a ton of out of the money positioning, but it has a lot of positioning at one strike. And that's keeping it kind of pinned for now. but that may not last forever. Most of it's on like the end of month and September OPEC strikes. Could Japan rug pull JPOW? Sure, yeah. I mean, it's possible. I believe their inflation came in a little bit hotter last week, which isn't great. Hold on. What did their inflation come in at last week? Is it their core? Yeah, core inflation came in hotter, but they're still missing the target on their month over month inflation, so maybe not a huge threat from Japan there. Their inflation will probably pick up with the rise in yen, but it'll take a little bit of time. I would say probably more of a threat from Japan at like the December or January meetings. Yeah, well, Yuta is just hawkish now. You know, he's kind of on the warpath. The problem is the rest of the committee doesn't really want to raise rates. So they're pushing back, and then, Japanese parliament's pushing back against the dovishness, and it's starting to turn into a mess. But I mean, I always generally expect Japan to act in the most conservative manner possible, right? So rash decisions are unlikely. Probably a lot of foreshadowing before we get anything like the last hike, right? Which has still been very slow to be implemented because they don't want to create a ton of turbulence in the market. My puts are treading water. So ABBV in the money interest is finally starting to fall off a little bit. It broke the uptrend towards the end of last week. Now it's kind of consolidating up a little bit, which could be bearish at like 200, but I still think it's got a little bit of range out to there. Obviously a failure here at like 197, 197.50. That could be pretty bad, and it might finally start to break down. I think mostly this would underperform with tech overperforming. Right now, tech's, I mean, it's performant, but it's not overperforming like Dow and like mid and small caps. And this is going to be more tied to like those defensive positioning. When does Dixie become an issue? I'm kind of surprised it's not already, but I would say under 100. The pound and the euro are up huge against the dollar over the last couple of weeks. The yen too. And so, yeah, I mean, the spread is getting tighter, but it's getting tighter very slowly, right? It's not like a rate cut where all the tightening occurs all at once, and so we're not seeing a ton of risk off, but we're seeing some, right? I mean, I think last week's intra-week high was like Tuesday. Yeah, it was like 7x, and we're at like 6.78 right now. Um, I would say it probably becomes a big problem below like 6.5. Yeah, I mean, if you want to make sure you have time, but yeah, yen longs are doing really well. Was it finally time to accept Carvana 200? I don't think Carvana's really got that much more upside room. Like 150, 750, 160. Beyond 160, there's not a lot going on the chain. Um, Friday, some really short dated, like 160, 250 positioning came in. Um, but that's going to be hard to get. And any like sell off on Carvana at this point has no fucking support. Like there's almost no downside support at all. So all of the everything keeping price pinned is like right at the money. Like those three strikes. So a loss of like 175.50 and it probably just falls back into the flat gamma where it doesn't have any meaningful support down to like 115. There's some 150, 160, 155, 150 puts building. Um, Looks like there's been a decent amount of volume on puts over the last, well, on Friday specifically. So I would probably wait out like the Russell 2K ETF FTD period and then maybe go short after that. Oh, that's cool. What site is that? That's our site, Carl. You guys can't do that on your version. Get wrecked. I'm surprised you let Dork pick the colors. For what? Did you draw the line and say we need to have something green? No, I picked the colors. Off to work. I'll probably just catch up on this later. Later, Jen Jen. I'm gonna have to be a poor and find my debit card to get access. Yeah, our payment provider still really doesn't like Amex. I don't know why. Oh, 1 second. All right. How much for your version of the beta? How much more do you want to pay to be able to highlight bars? Because we can make an add-on. Oh my god. You're a genius. Cosmetics? And microtransactions? I think the Tinker Strike still shows that it is a dangerous place. What? Oh, the Houthi strike? Yeah. Was on an illegal oil shipment? What a way to get caught. When beta mystery gift packs? I don't know, but I'm getting all kinds of ideas right now. Anyway. Crew signed up for Disney Plus. Nothing we can do. Were there any other questions? Gamma Strike skins, only $99. Right? You get like custom skins. That'd be cool. I want custom skins now. Loot boxes for mystery pickles picks. When Fubo Range Rover price? How do you not have a Range Rover off of Epam? Could Hal bullputs be a rolling position? Yeah, I mean, you could. It's still got some decent support. They did have a cyber attack on Friday, so maybe careful with that, but I don't see why not. Notice high gamma at 33. Yeah, it's Hal's looking pretty good actually. I've just been like, I still have my leaps that I got back when it dropped again, but I've still got like bull puts out at, let's see, 30. And those are, I have those kind of layered out till September 20th. Definitely gets a bit more bullish on the call side, above 33. 33 is kind of like a big resistance right now. I think largely that's sold calls, but there is some put selling out there, which might be a little bit more bullish. Obviously, continued escalation in the Middle East is gonna create, more demand for U.S. oil expansion, which Haliburton benefits from. A lot of my play on Haliburton into the end of the year is I think oil supplies are going to, well, oil storage is going to hit a deficit. And I think if that's the case, like OPEC maintains their cuts and we get a deficit in supply, I think oil will rip. And I think Haliburton would benefit a lot from that. Can we look at Ulta? Yeah, sure. Ulta's one I've been watching. I've still got some longs on it that have been that have been kind of chilling since the last time we went long. I had some runners that I never got to close. It's recovering. I think it looks pretty good from 380 up. I might re-enter right around that previous entry at like 385 where I was kind of looking last time. It does have a lot of resistance, like 395, 400, but I think if it gets out above that, as high as like 420. Copper looks like it's gonna break out. It might. Precious metals have been doing pretty well. How's Nvidia chain looking for earnings? It's heavily call skewed, especially above 130. Options are overpriced, as you would expect. Yeah, CrowdStrike's been doing really well too. I haven't re-entered CrowdStrike, however, since earlier in the week, and I don't think I want to. I got out of CrowdStrike last Wednesday. I might re-enter if it gets above 80. But right now, I think on the test that we got earlier in the week, a bunch of the call interest that was at the money sold off and took profit, which kind of weakened the chain to the upside a little bit. And it was one of the reasons like Friday's bounce back wasn't so great. But I do think if it gets out above 280, it's pretty bullish up to like 300. So I might be a little bit more interested in playing like this upside range here on a breakout versus trying to like go long here. Yeah. Because that could pull back. Actually, it could pull back quite a bit. So that's I think entries here are a little too risky. Unless you're already long back at 60. And if you're still long from when it was a pickles pick, then you're not in a terrible spot. But I would still watch out for a loss of like 67.50. Like I would probably adjust risk up like that. 66, 65. Because this kind of just looks like a head and shoulders. When Costco 400, 2026 leaps. I don't know. I want to buy puts on it again, but not yet. Kind of waiting. This might be a good entry. Actually. Yeah, if Costco lost 75 here, I'd be interested in going short. But honestly, it looks like it's going to 900. There's a lot of out of the money calls, and I don't think they're really very heavily sold until a test of 9. So maybe I'd wait for that. This wasn't quite high enough. Costco opened in Japan had a 3.5 mile long line. Nice. Anyway, yeah, that's about what I got for that. Oh, Netflix was starting to look a little bit bearish. We could talk about that. So Netflix failed the 700 test. It's got a little bit of support at 680 still. And right now it hasn't, like, it found support on that on Friday. Hold on, I gotta zoom in a bunch so you guys can see this. That support at 80 on Friday might mean it gets a second test at 700 before actually failing, but I think if it does get another test at 700, I might consider shorting it. Gamma Max is starting to, like, move away from spot. Dealer Delta fell negative into the end of the week. Gamma's been falling off pretty quickly. And Gamma Neutral's at like 650 now, which is getting a lot closer to spot. No, I haven't covered SPX yet. I do that in the second half of the stream generally. Speaking of the second half of the stream, I wonder what oh, no one's in there yet. Who gives a shit about WWE programming on Netflix? What are you, 14? You think that's going to make a difference in their bottom line? They actually don't make a lot of money on the fuel, which is problematic for them. I'm not covering shrimp. Can you go over what falling interest rates will do to SPX so I can watch in the future? So I've been thinking over the last couple of weeks of how to explain the dynamic of the current situation to you guys a little bit. And basically, I've landed on, if rates remain stagnant, this is bullish for tech because they have big cash reserves, right? Bullish for tech. And the dollar, right? Uh, so Fed funds rate stays at 5.5. A slow, gradual stair step down in rates over the next year and a half. So let's say end of 2026. Slow cuts at, like, 0.25 increments is bullish for small, mid, utilities, and like materials and manufacturing. All right. Rapid cuts. .5 increments or greater. This is just bearish for everything. Let me get rid of the background here. Except bonds. Great for bonds. And okay, bullish for commodities. Because this is higher for longer, right? This is soft landing. which can rapidly turn into this at any point. And this is a hard landing slash recession. So that way you guys have maybe a little bit better of an idea of what we're looking at and like how the data is influencing things, right? So, if inflation is up, that increases the probability of higher for longer. If inflation is moderating but not cooling and the labor market is staying fairly stagnant, that increases the chances of the soft landing again, right? If labor is falling really hard and inflation is turning down, like deflationary, that's the hard landing, right? There is no rate hike option, right? The Fed is not going to willingly choose to blow up banks for fun. So I don't think there's any situation where we get higher rates unless we do something like this, right? Like knee jerk reaction, cut 50 points, and then inflation skyrockets. In that case, the Fed might have to return to this, but I don't know if they'd push above 5.5. And if that kind of shit starts happening, we're probably in a much worse scenario anyway. So, commodities. Isn't the 0.25 bip cut the move that just confuses everyone, though? I mean, it's the move I see the Fed taking to test the waters while maintaining some control. However, um, even with some de-risking in the short-term carry, it's going to create some volatility. Worse yet, 0.25 might be enough that Yellen blows herself up. Yeah, that's what I think would happen is that we'd get greater. I kind of agree with that. We're gonna get greater demand on homes on a 0.25 cut. Mortgage rates will fall closer to 6%, probably like 5 with like 20 to 30% down. We'll get another upswing in housing into the fall where inventory is more limited, and that'll drive up like home price and rental inflation into the first quarter of 2025. I think that's how it's going to be, like it was with Burns Volcker. Yeah, it's starting to look very similar to that outcome. More and more, right? Especially with the Fed so pressured to be like, we won. Um, I think there's a that like the governors and the Fed are still mixed in their projections, but I think enough of them are leaning into some kind of rate cut, right? Because they want to maintain the semblance, like the illusion of influence. But the problem, I think, the biggest problems with the soft landing is a the TGA, right? We're probably going to like if they cut 25 points, we're probably going to see a ton of money move back into RRP, right? As the like yield on the like liquid cash maturities falls, right? Because if they cut 2.5, the bond market's going to price in another 2.5 on the 3 month, right? And probably 0.75 on the 6 month. And so since overnight RRP is still going to be at 5.25%, everyone's going to start pumping money back into RRP, and equities are going to fall, and liquidity is going to dry up on the like short-term maturities that Yellen wants to sell everybody, right? Which is she's going to have to move out to the mid-range of the curve, like and start increasing the auctions on like the 2, 3, and 5 years, right? And if she starts doing that, the TGA is gonna get fucked. Especially if everybody fucking starts extending their corporate taxes again. Are you bullish on Zion? No. They actually have a shitload of commercial real estate exposure. So they could do 0.25 and then just continue to hold that for like another year, right? Like we get one upside, but then then they have to worry about Japan raising rates and further narrowing the spread, driving up the top end of the yield curve. And that's where like the fear should be, right? Is that no matter what they choose to do here, it's very likely that the top end of the yield curve is going to move up, and that's where banks have their exposure risk. So we're Yellen's been doing all this work on YCC, like, well, what is essentially YCC, to remove that risk from the banks by keeping the top end of the yield curve pretty suppressed, right? And if that stops, or she has to move to longer maturities, the top end of the yield curve is going to rise. And almost all of these outcomes, the top end of the curve moves up. Touch me in my PFix. Yeah. Yeah, PFix is pretty cool for that. The rate cut chart you have was creeping up Friday. Yeah, it was. So this is for Jan 2025. And Fed fund futures are getting really close to pricing in like 100 points of cuts by Jan, right? And this is like recessionary. This means the Fed fund futures, they think the Fed needs to cut quickly, and the bond market agrees, right? The bond market and the dollar are in complete disagreement with the moves in tech, like Dow, ES, right? Like these equity moves are not, they're not congruent with what the bond market is pricing in. Early September data is going to be fun. Yeah, starting with GDP. GDP this week is going to be pretty crazy, I think. Especially if it misses expectations, right? We need to continue to show that like that strong growth, right? And if we're not showing that growth, that's going to be a big problem, because that means inflation is on the rise, right? In your honest opinion, do you think they're going to cut? I think I think they can make an excuse to cut 0.25. I can't see them. I really don't see them doing like a point 0.5 cut, unless like non-farms, or well, like after the revisions, like non-farms and unemployment are way the fuck up. Like like unemployment hits like 4.8 or 5%. But then that's just telling us that we've been in a recession all along, which I kind of have a fun chart for. Hold on, let me pull that up for you guys. So these are delinquent credit card balances, or in serious delinquency, so greater than 90 days delinquent. Um, and this is current. This is from like last week's B of A report. Um, and historically, you know, big rises in like especially very sharp rises in serious delinquencies on credit cards are indicative of us already being in a recession. So this further confirms what the SOM rule already told us in the last unemployment report. Well, that's the thing about the SOM rule is it lags so much that it's almost always right because it's telling you that like a recession is starting to end more than one is beginning, right? Like we're already deep into a recession when the SOM rule actually triggers. Also, there's the CMBS time bomb. Yeah, I mean, there's CMBS time bomb. There's more maturity walls coming up for small and mid cap companies, right? The annualized unemployment rate chart is usually a nice early indicator, also. Well, I mean, you know what's crazy? If we look at, like, oh, sorry. Hold on. If we go look at, like, the LEI, right? This looks like dog shit. Like, all of our leading economic indicators are fucking terrible. They're almost as bad as they were in the pandemic still, and it's not really getting aggressively better, right? Like we're not getting the, you know, consistent improvement that we would normally see in like a recovery, right? It just like ticks up, ticks down, ticks up, ticks down. If we're already deep in a recession, then this isn't too bad. Well, the problem is we find out we're deep in a recession and the wealth bubble evaporates. And then the impact of the recession is felt, right? Everyone goes, oh shit, pulls their money out of everything. Asset values decline all over the place. And all of a sudden, everyone's a lot more broke than they were 6 months before that. Anyway. Ooh. We got the boys. What's up, boys? Hey.
So anyways,
How's your
I
butt,
should
Dork?
put it in my butt, huh? Yeah. Ugh. We were just sitting in comfortable silence as we click through stupid things and work on stupid stuff. How you doing, bud?
Doing all right.
Yeah, I'm just trying to figure out what to talk about this week that's interesting.
I just shared a fun chart about credit card delinquencies.
Oh, they're
Oh
up,
yeah,
aren't they?
what's going on there?
They're sky high. Second chart in the chat if you want to look it up.
I seem to remember a certain dork mentioning that was going to happen like 8 months ago.
There's a lot of charts here.
I remember a certain Gherk doing an entire write-up on the state of the U.S. consumer and how they were fucked. It's good that we agree on things.
Yeah.
I love how half of the data says that we're in a booming economy and the other half says we might not be. And then like the revisions make you unsure of which ones are still booming and which ones aren't. And it just makes me realize even more that all the data that we're measuring is just noise.
I
It's
think
all,
I think
yeah.
what we're I think what we're seeing is really a K-shaped recovery in the economy. Certain things are doing just fine and have fully recovered, and other things have never fully recovered.
We call that an increase in wealth inequality,
I mean, yeah, but I'm trying not to
which
be
has been
biased,
happening
right?
for the last 40 years.
I'm trying to use an unbiased term that doesn't, it's just a little more like this. When people talk about it in the news, right?
Yeah, but it's
They
so I guess what I'm saying is it's not a recovery more so than it's just a continuation of a long-term trend.
Right. Well, the K also, right? Like if you take the superposition of the two sides of the K, right, you end up with a flattish line that looks normal.
Yeah, sure.
So that's more so what I'm getting after, because yeah, a lot. You're right. A lot of the fucking data just is, totally humdrum normal. Like except for the part where deficit spending as a percent of GDP is ridiculous. If you don't think about that too much, then
I
it looks
think
quite
about that
awesome.
all the time.
I know, I know. Uh, but yeah, but then you
I don't
see
ever
data like
shut the fuck up about it.
well, I mean, yeah, it's kind of a big deal, right?
10.9 though, that's pretty good, right?
10.9% of total credit accounts in serious default. Sure.
Damn, dude, that's crazy. I wonder what I haven't. You know what's funny is it's been a
I
long time
auto
since I've
loans
gotten a
probably
credit
look
card offer.
auto loans probably look really awful.
Why can't they just sell stocks to pay their credit cards?
Well, you can't sell your
He's,
Nvidia right before earnings. Are you crazy?
I
I mean,
guess.
when you're 90 plus days delinquent, like, uh, I mean, that could be like any size though, right? I wish I knew what the balance was on these delinquent cards. That'd be nice.
Mm, I have no
But
idea. Look at
well,
the last consumer debt,
yeah,
and
you could
then
just, I guess you could just
11% of
multiply
that.
them,
So
right?
it's like what? So it was like 17 trillion.
I'm making the chart as we speak. Your
Okay.
credit
Spread it
card.
up.
So something we can talk about is share buybacks and how the bulls have kind of let the share buyback cycle kick off a large chunk of our bounce over the last couple of weeks. Like, they really leaned into that blackout period coming to an end as we moved through the early part of this quarter's earnings, right? And those share buyback blackouts started to roll off, and buyback flows came back in, and they are again excessively high. However, the ability of the bulls to lean into that is going to diminish, right? And we should talk about that because currently S&P 500 cash as a percent of total assets is nearing a low not seen since June of '08. So
Oh,
the cash in all of the S&P 500 is starting to dwindle. And we're going to start to see those share buyback flows trim pretty significantly. And I think these buyback flows are a significant part of like what drives the bullish price action in the options market, not just the option selling, right? The option selling is largely protected by these buyback flows. And sometimes, it's like as much as like 50 billion in a week. It's a lot of fucking money. But they're running out of money. With 8.8% now cash as part of total assets.
that's crazy.
Yeah.
That's even lower than like the average US household.
Yeah.
That's like and like yeah, that's wild.
Can you talk about
I mean,
Amazon? It's bullish above 180.
usually at like the height of our previous bubbles, the US household is like somewhere between like 13.5 and 15% cash.
Yeah.
We're at about 15 now.
This is a fun chart. I did it.
Additionally, hedge funds are shedding their weighted holdings in Google, Amazon, Apple, Nvidia, and Microsoft. So if we look at average active ownership portfolio weighting versus S&P 500 weighting, hedge funds are going underweight five of the largest components of the Mag 7. They're only overweight Meta, and then like Intel, Oracle, QCOM, Adobe, CRM, and Intuit seem to be the choice for where they're putting the majority of leverage.
Yeah, it seems like they don't like more than about a third of their holdings to be 7 companies.
Yeah, yeah. Well, I mean,
Seems...
they were massively overweight all of those up until this most recent correction, and then coming out of this correction, they are not. They are no longer overweight those things, right? Give me 1 second.
All right.
Hey, Jfresh,
All
check out the
right.
chart I
Yeah, I'm
just
looking at
posted.
this chart. Nobody else can see it, but
It's
delinquency
excellent.
rate on credit card loans, all commercial banks, times balance sheet total assets, loans to individuals, credit cards. So this is total delinquency value.
Right, right, yeah. This is like how much credit is considered at risk, I guess you could say, in aggregate.
Yeah, it's hard. It's a little misleading, right? Because there's a lot more fucking money now than there was in 2020.
Well, yeah, for sure, but this whole thing is it does show like the total leverage, right, in a way. Uh, I guess I guess not really leverage, right? But if you were to sort of figure out HTM like sort of at risk positions, this would sort of describe the same thing. If you're the one lending these out, right, your value is inverse this chart. So
Yeah.
you want so there's like what 35-ish billion in aggregate if you were to trust this number, but it obviously has a lot
Can
of
you
flaws
divide this
because of
by M2?
You
you want this as a
probably
percent of
could.
M2. It's going to be microscopically small.
I
Yeah.
don't care what the number is on the left. I just want to see the trend.
Yeah, I get you. All right. For
Oh, is this our
C,
delinquencies
This
yeah,
is like total delinquency value.
as a percentage of assets?
No,
Oh, okay.
just
just
it's just like
total
nominal.
dollar value of
Oh,
delinquencies.
okay. So you're indexing it.
Yeah, and I want to see what it looks like as a percent of total money.
That's a lot of money.
Oh
That's a
wait, I
lot of
need to.
delinquent credit. Is that? Well, yeah. Okay, so that's about 10% of what the U.S. total household debt is. That's pretty
There we
close. Like 3 trillion. It's actually about
go.
double. It's like 20%.
Well, it's like no, those are it's in millions, so that's like 30 billion something nominal value, and then
All
JFresh,
right,
I got your
this is
chart up.
divided by M2. Yeah, so we're like back to trend before COVID.
Ooh.
But keep in mind, people still aren't fucking paying their student loans for some reason.
Yeah, this is
My
just
wife
looking at
is,
credit cards, right?
but somehow a lot of people still aren't. Well, that's the thing, right? They don't have to pay the student loan, so they can still float everything else. If you threw student loans fully back onto everybody tomorrow, it
I
would
think they
collapse.
I think they fire back up on September 30th.
Who knows?
Yeah, dude, Biden has been pushing so hard for student loan forgiveness, like for a reason.
He just keeps
Yeah.
pushing out the
Yeah.
forbearance like forever.
Well, yeah, it's like, what are you gonna like? How are you gonna recoup a college degree from someone who, like, like $150,000 college degree from someone whose net worth is maybe like 15 grand, right? What are you gonna do? Garnish their wages for the next like 50 years?
Yeah, actually, that's what they've been doing. Like, there's people who are like retiring and still have paid so little of their debt that they owe more than at retirement than they did like when they left college, even after paying for their entire life.
Wow.
This is another one I wanted to cover is percentage of US employed workers with multiple jobs.
I should pop your stream up. Is what I
I
should
mean,
do.
don't we technically have multiple jobs now?
Well, no, we own a company and then have jobs. I don't have any jobs.
That's sad.
Yeah.
Every man should have at least one job.
Well, I did get like trader status with the IRS finally. So I guess I'm technically like, not unemployed in their eyes anymore.
There you go. Get yourself in that job cannon. Fire
Yeah.
yourself off in the job land.
But 5.3, so this might belie some more of the prejudice we're seeing in the labor reports though, right? And 5.3% of workers have multiple jobs. um Poopy Pants has 2 jobs. Having a job blows. Yeah, well, these people have 2 or more.
I mean, there's something to having a job that you like. Having a job just doesn't blow in general. I mean, it
Yeah.
does blow in general, but same time, if you like what you do, you love
It's
what
an
you do.
it's an interesting foil to what we've been seeing in the strength in the labor market though, especially when you're dealing with like a lot of people in like tech that are working multiple at-home jobs, right?
Yeah,
As
the whole overemployed fad is crazy.
Yeah,
Yeah, people will do like they'll take like 2, 3 jobs and see how long they can fucking swing it at all these jobs before getting fired from one of them or 2 of them.
It's crazy.
It's nuts, dude. Yeah, I mean, well, it's because it just goes to show, Jay Fresh, your whole point about fucking bullshit jobs, right? If these people can work 4 of them at a time, like, and get paid the way they do, like that really shows you just how inflated uh, productivity is in the tech sector.
Oh yeah. Productivity is just a fun way of saying inflation.
Exactly, exactly.
I have a job. It's okay. So before you guys hopped on, I kind of went over, the various outcomes for, you know, the Fed decision making over the next couple of months, like monetary policy and what the market is kind of trying to price in all over the place, but it's leading to like a lot of like confusion, right? We have like the equities
Oh yeah.
market that's pricing in higher inflation and higher for longer, especially in like, tech and mega caps. You've got small caps trying to price in a soft landing and mid caps doing something very similar. And then we've got, precious metals and energy kind of trying to price in a recession or extended period of stagnation with a falling dollar, right?
Yeah.
And in case anybody thinks that's bullshit, this chart pretty much explains that nobody has any idea what the fuck is going on right now. um this is TLT, GC, SPX, Dixie, CL, and HG. And they're all negatively correlated to where they're supposed to be currently. Which is really funny, right? So the market's just confused, and generally extended periods of confusion create fear.
Yeah, I would agree with that. I also
Max,
create volatility because some of that confusion is just positioning and the flows from various positioning. You never know, like, what's being affected by someone's hedge for
well, it's
something, which is the exact opposite of what
yeah.
the thing is telling you. So yeah, I mean,
I mean,
really
I
just a
think
lot of
I think it kind
confusion and
of
a lot of trading and flows between assets.
I think they've stayed so imbalanced for so long at this point though that it's kind of like everybody's picked one of 3 outcomes and they're just leveraging up that outcome.
Yeah, that could also be true.
Especially
You'll
over the last like 3 weeks, where like bonds are up, mid and small caps are up, SPX and tech are up, right? Like everyone's just longing the thing they think's gonna win in the 3-horse race.
They're not the dollar. This is like the new thing I'm going to start harping on because, speaking of J Powell and Jackson's Hole, which I think is where we're going in this discussion, is I was able to get around to listen to his speech, and it was. I was visibly shaken by like how deep down the Phillips curve hole he's fallen, and how like totally lost that means that they are, and they have no idea what's going on, how to interpret anything, because they're the students that are just like, all right, what's the equation that I plug numbers into? Just tell me the equation that they don't understand. They just want to get an answer. And like that's the Fed right now. There's like, give me the Phillips curve equation so I can plug in the numbers and get an answer. And they don't understand it.
My favorite part of the Jackson Hole speech was just like the first 5 minutes where he's like, guys, after 2 long years of struggle and various monetary policy and expected outcomes, we finally reached a point where we're ready to do maybe nothing.
Yeah, I mean,
like he's like, we're ready to cut rates if the data's there and it supports an inflation.
It was the dovish pause, dude. It was straight up dovish pause.
The dovish pause. He's just oscillating from hawkish to dovish pause and never changing rates because they can't.
I mean, I'm ready for the hawkish ease. But I mean, so the thing that kills me, right, is he talked a lot about part of this new Keynesian Phillips curve bullshit is inflation expectations, as if inflation expectations actually have some impact on future inflation, which there's zero evidence that is the case. It is used as a tautology whereby they take the inflation expectations, which are simply a measure of past inflation, plug it into the Phillips curve model, into their fudge factor, and lo and behold, out pops inflation. So you put in inflation, you get out inflation. And then all the other things they put in there are just, little additional fudge factors to handle the lag between measured inflation and expected inflation. So my question to him and to them in general, which is a question I'll be asking many times, because I think this simple question roundly refutes this idea that inflation expectations matter. If inflation expectations are actually under control, like the Fed would have you suggest, why does nobody want to own the fucking dollar? Households want to own the dollar significantly less than they did at any point in the 70s. And businesses want to own the dollar almost at the smallest amount that we've ever recorded. So who wants, right? If nobody wants to own the dollar, if nobody wants to hold on to them, how can we say that inflation expectations are controlled and low?
It's a good question, Jay Fresh.
They don't match. They're conflicting. And usually when they're conflicting, I assume the Phillips curve is bullshit.
I mean, you're following the money, right? And the money just is not suggesting the same thing that the narrative is suggesting. It's you're very, very
I mean, households owning less than 15% of their assets in dollars and businesses owning less than 9% of their assets in dollars does not indicate to me that people have a lot of confidence in the future value of the dollar.
Well, but that's just because, I mean, the fundamental assumption about like our current monetary environment is that the dollar will always continue to devalue. So it is in everybody's best interest to minimize the amount of cash that they hold, right? And the
Well,
part
yeah.
but the part that is more concerning about that is how does that affect people's willingness to enter into credit, right? So if you want to buy treasuries with your cash or something, how stoked are you to buy treasuries right now,
I mean,
right?
I'm not
Because
stoked at all because they're going to lose value over time because they're not yielding what inflation is going to be.
right, but that's the dangerous part, right? Because think about it, like if businesses and stuff aren't really feeling so happy about lending money to the government, right? Then it's going to kind of take this whole deficit spending party and kind of take a big old dump in the punch bowl.
Yeah, that's what I'm
Yeah.
predicting will happen eventually.
I don't even think it's that far away, right? If we start cutting, Yellen's free liquid cash on the front end is going to dry up. There's not going to be enough liquidity between like 4 weeks to 3 years for her to really for her to fill the TGA enough to pay off the fucking debt she's already issued, right?
Yeah, it'll be interesting to see those dynamics. I'm assuming that they're talking to each other, but who knows?
Yeah, I mean, I would agree, but I think this chart's kind of fun on that front. If we look at total money market assets, right? And then we look at those assets as a percent of the S&P 500 market cap. So there's 6.216 trillion currently in money market funds as of Friday. But those total assets as a percentage of S&P market cap are only 13%. So
Yeah, that seems about right. Yeah,
yeah, so everyone's
because it's something in between households and companies, right? So it's somewhere
yeah.
between 9 and 15, which is about what. Yeah, that seems consistent.
Yeah, that's uh that's a chart.
It is a it is a chart. I mean, well, there's there for some reason that idea like still persists that there's money like on the sidelines, right?
Well, that's this money
Um,
market fund
That's
money
yeah,
as opposed
that's
to the sideline money.
money.
all of
You
that
can't
money is like
store you can't store
currently.
money in the stock market. It's always on the sidelines.
Yeah, I
You can
know.
either put it you can either put it in a bank or at the Treasury, or I guess a balance at the Fed. But it basically goes either into a bank or to the Treasury. There's nowhere else it can be.
They could be in H100s though.
But if you take that
No.
and you take the drying up corporate cash assets, right, and you presume that moving forward, not only is money in money markets going to start to dwindle, right? So leverage is going to be lost there. Flows are going to be lost on the corporate buyback side because they're running out of cash, right? And you start to run into a situation where the liquidity available to put into equities is declining at a fairly rapid rate. And I wanted to point out the money market thing because any Fed rate cut is going to significantly impact that liquidity, right?
Yeah, for sure.
Oh
This
yeah,
this
yeah.
this this sounds like a lot like we're about to experience one of those markets where corporate buybacks really do kind of go away or at least are reduced significantly, right? And the corporate like the share buybacks these companies are doing, like I mean, it is largely responsible for the remarkable resilience we've seen. I mean, who else, right? Like what do you expect would happen when you have, a company say they're going to buy several billion dollars of their own stock, right? Like that's like if any investor had said that, it's the same outcome, right? The
Yeah,
stock's going to get
exactly.
priced up. So like that's just once that no longer that valuation increase is no longer there, like we're probably just going to start trading flat because they're probably the biggest sole determinant of the upside price action in the S&P. So like yeah, it sounds like flat fest to me, possibly worse, because if that's happening, then we're probably looking at cost cutting measures as well, right? Because all these companies want to do is buy back their own shares. So if they can't, they're going to do everything they can to get back into that space.
Yeah, and then we got to look at this kind of cool chart, right? Which is, prior rate cut trajectories and where they fell into a recession, right? Over like 50, 100, 150, 200, 250 trading days. And so you can see like a very slow, consistent pace of cuts over time has a significantly better chance of not falling into a recession, right? But almost any pace of cuts that is rapid almost guarantees a recession.
Well, that's kind of a chicken and the egg sort of thing, right? Because
Yeah, that's a cause and
it's like,
effect question
yeah, a bunch
there.
of banks collapsed and liquidity died, and then the Fed cut straight to zero because they were fucked.
Yeah,
You know,
and
that
and so like Fed fund futures right now, and we kind of I talked about this a little bit on Friday, but we're pricing at about 0.92 by Jan of 2025. Um, and so we're really right on the verge of just Fed fund futures pricing in a full blown recession, right? Once you start pricing in like two sets of 50-point cuts in the next 4 months, um, you're really, I mean, statistically, or at least based on historic evidence, you're looking at a pace of cuts that is going to drive us into a recession, or we're already in the recession, right?
yeah, I mean, I don't know. The Fed funds futures, right? I feel like what's really happening is they're trying to price the overnight rate somewhere around long-term inflation, right? So this is sort of a proxy for that expectation. And so what they're really saying is like this is, where we expect things to shake out in terms of our long-term trajectory, which is interesting in itself, right? Because if they are pricing in a recession at that rate, then that's going to be, a little more
Well,
squirrely
that's
than,
that's what's guiding the dollar down. Back to like Jay Fresh's earlier point, right? Is those Fed fund futures are pricing in a recession. They're pricing in that lower dollar, and so are the bond markets, right? It's only the equity markets that disagree with the dollar falling. They're like, that's not a problem. It doesn't matter if the dollar is down 5% in a week. It's okay.
yeah. I mean, well, the thing is as dollar goes down, right? Doesn't that like in a way increase the value of equity just in notional terms? And
Not
that's the arb that's
necessarily.
getting filled?
No, not necessarily. In a country where the majority of their corporate interest is domestically domiciled, then yes. For the U.S., no, because all of our corporations are international. They're all sitting on massive fat stacks of cash, right? Even though their total cash is percent of their net assets has declined, they still have huge piles of cash, right? And so
Hmm.
and all of their investments are dollar denominated. And
Hmm.
so, they're losing money on the exchange rate, especially, right? They're losing money in the on cash held, and they're losing money on their assets.
Nice.
So from a valuation standpoint, a declining dollar is very bad. When you look at a country like Japan, where the declining yen influences investment into their market. Um, that's because, outside of a few like mega conglomerates and corporations, most of their companies are domestic, right? They make money in yen, they exchange yen, their assets are in yen, right? And then they have a few mega corporations that really benefit from a low yen, but everyone else is super exposed to import costs, because it's an island, right? And so it doesn't necessarily work that way for the US. I mean, if you look at like 2022 when dollar was really low, that was really bad for tech, which is 30% of our primary index, right?
Yeah, it makes sense.
Yeah. So it's along with those big moats comes big exposure to the dollar, right?
Yeah, yeah, and I've always kind of like I've always thought that, but I'm trying to make sure I understand sort of
It's
what
confusing.
it is. It's
It
weird, and
is, yeah.
you think to yourself like, oh man, yeah, if dollar goes down, right? If they you kind of think of assets as durable goods and stuff. So, but you're right. If they have tons of cash, that cash is dropping in value. Pretty much one-to-one correlated, especially because they are multinational. You know, that are hanging out here.
Yep.
Ugh,
Higher foreign
gross.
investment in US equities offset lower dollar? No, because their currencies might be stronger, right? Also, their most foreign investors are already massively overexposed to the dollar as it is. So now they're getting hit, right? They need to pull back and then wait for a bottom and reinvest later. So I think it's more likely to lead to outflows in the dollar rather than inflows because everybody's already had their currency shit the bed and they've gone long dollar, right? So now everybody's already long dollar and the dollar's shitting the bed, which means that everybody's like China's been buying treasuries, right? All the central banks are trying to hedge off their massive treasury exposure by buying into gold, and that's why gold's rocketing. And so yeah, I mean it's kind of like the prior scare pushed everyone long dollar, and so now everybody's exposed where they shouldn't be yet. And so I would say in a normal situation, yeah, everybody would be trying to go long, like long US equities as the dollar declines. Um but now everybody's already overexposed to US equities. And so there's no advantage to be gained from the declining dollar. In fact, they're just going to lose money, right? And then even with the declining dollar, it's still stronger than the local currency. So, they've just got to take the hit on the gain that they had in the dollar as things find an equilibrium. Oh, and this
Yeah.
chart's this chart's just for you, Doric.
What you got? What you got?
Single family home active inventory for 2024.
Hmm. That's interesting.
It is.
Wow, look at that. Okay, yeah. So that's pretty fun. Um, what's interesting though is inventory is still so low, right?
Yeah,
But
it's
it's
very
rising.
low. Yeah.
So this is a cool chart. Uh, guess I'm gonna have to live in my
Yeah,
house.
I mean it's still low, but it's rising in a way that it's not consistent with its usual seasonal variations. Like at this point, it's supposed to be flat, and it's still rising, which indicates that there's a longer term trend there. Um, Beyond just the typical housing season. I mean there's something happening now where, and you can look too, especially in like Florida and a lot of parts of Texas, thankfully not where I'm at yet, but I'm sure it's coming at some point. But a lot of parts in Texas are showing significant declines in prices, which is consistent with this odd raise in inventory. So there will be, I think there will be a reckoning. The reckoning is slowly starting in housing. That people just paid too much and they can't afford to continue paying it.
Yeah.
Now, will that be will that have a cascading effect, or will that
Well, I
level
mean,
out? I don't know.
so home sales spiked 2022 to 2024, right? And now unemployment is going up, and the unemployed portion of everybody who got home loans at 6, 7, 8%, as their unemployment in that section of laborers rises, you're going to get, foreclosures and sell offs in those homes that were bought over the last 2 years, right? Because they need to get out of those mortgages. They can't afford $5,000 a month mortgages with no job, right? And then, or well, 3 to 5,000, I think is like the average.
Yeah.
And so, as those homes start to hit the market, which is what I think we're seeing here, that is going to then drive prices in local markets down. And, that is something we're seeing in parts of Texas and Florida where, there's so much liquidity in the market that the market prices are being driven down. And that's going to pull the people in those 3 to 2% mortgages out, and they're going to want to sell while the value of their home is still up, right? And that adds then additional inventory. And then you start getting, longer term homeowners that maybe own their homes in cash that are going to start to want to, sell, but as prices start to decline more and more rapidly, right?
Wait a minute, but where are all these people going to live? Are you implying that there's already plenty of places to live and that this was all speculation?
Yeah.
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 Okay. So I feel like we fought about that a few weeks ago.
Did we? I have a friend who owns 20 Airbnb properties. So I don't
Well,
think
I remember we were fighting about it, and so I pulled up that chart that shows that for the last like 40 years, we've had roughly 0.5 homes per person in the country without fail.
Yeah. I don't know
So
if
like
that was me
supply
you were
shortage
fighting
narrative
with.
is stupid. I was fighting with someone. Maybe I
Okay.
was fighting with windmills and clouds.
Maybe, yeah. I don't know. I mean, I've mostly agreed that we have plenty of housing inventory for all the people that actually live here, um, and then most of the reason rents are up is due to like Airbnb and Verbo and shit like that, because properties that would otherwise be rented are being held off of the market in an effort to um get a higher month to month rate than they would in the rental market on 6 month or 1 year leases, right? Or 2 year leases.
Yeah.
And those people will take a loss before they will rent that property for a year to like a family, right? And that's one of the reasons rental prices haven't come down or moderated, because and a lot of them are so over leveraged in those properties they can't miss that like cash flow target, right? Not even for a
Yep.
month. And so yeah, I mean, I'm pretty much in full agreement with you there.
Yeah, it's gonna be fun.
From there, one of the other choices besides commodities would be for other nations to speculate on crypto, mainly BTC. No one's gonna BTC is just a leveraged dollar commodity.
Yeah,
No
it's just
one's
a
no one's gonna
speculative asset.
speculate on BTC with their like sovereign wealth. That's insane.
Yeah,
Yeah,
it's a speculative
they'll
asset
buy
that
gold,
costs.
and that's exactly what
It's a
they're doing.
it's a speculative asset that costs 70 something K per Bitcoin to mine. So the market requires the cost of trading and sustaining the Bitcoin market requires that Bitcoin be $70,000. Now you ask yourself, does a thing that does nothing can it maintain a $70,000 price tag forever? Probably not.
El Salvador is not a real country. No one cares what El Salvador does with their sovereign wealth. Only people that give a shit about El Salvador are, former gang members and possibly BTC enthusiasts.
Yeah, BTC enthusiasts.
Uh,
Yeah, you want to know why Bitcoin keeps like floating up to 70 something thousand dollars and then just gets batted right back down? Because all those miners are like, hey, I can break even. I'm going to sell some of the Bitcoin I mined.
Yeah, also because just hedge funds buy the bottom and then blow the top out.
It's fun.
God.
It's a fun
no,
little game.
no future gang members. They arrested all the gang members.
So
I
other
don't want to
than
talk about
chaos and confusion in all the markets and everybody somehow pricing in everything all at once, except for, well, yeah, kind of pricing in everything all at once in different places. Um, we haven't talked about the only thing that actually matters next week.
GDP?
No. No more guesses. It's not fun if you don't guess.
I,
Uh,
I just said GDP.
No, it's not that.
Well, I don't like that. PC? Who gives a
Nope.
shit about that? Okay.
the auctions.
Nope.
Are you getting a vasectomy?
Nope.
Oh,
Uh,
we got nothing.
inflation expectations.
Absolutely not. Nvidia earnings. Come on, guys.
Oh shit!
Oh.
Yeah, you're right. Yeah,
Does that actually matter?
Yeah,
it does to
that's
the stock
holding
market.
up the entire world right now.
They already punted the Blackwell launch, and Jensen's been selling like 14 million in shares every day.
I just want to know. Jensen was flying so high. He was signing breasts just a few months ago. Why did he stop signing breasts?
Because you don't have time to sign breasts when you're trying to bail out of your position. He can sign breasts after he's done selling all his stock.
Yeah, but then they're not going to want him to touch their breasts.
That's not true. Because he's making $14 million a day in cash.
Oh, yeah, you're
Yeah.
right. He is rich.
Probably actually touch more
Really?
breasts that way.
What do you think his wife thought about him signing her breast? Do you think
Is
that
he-
was a conversation at home?
Is he married?
I'm assuming so.
Maybe he's in an open relationship.
You never know. Yeah, I think Nvidia is going to be interesting, right? Because I mean, obviously, I think the expectations they're going to beat is pretty realistic. We've talked about that in the past month or so. I mean, Elon Musk basically gave him like a freebie $6 billion to. I guess he released Grok. I've played with it a little bit. It's kind of like every other chatbot. It's actually just kind of worse. So I don't really know what he's going to use it for. But he gave $6 billion to Jensen, so that's great.
Maybe he's just $10 billion short Nvidia, and then he's gonna create like a media buzz that Nvidia sucks.
I somehow doubt that because he built his own facility to manage the chips and shit.
But he'll just sue Nvidia, right?
I don't
I
know.
wonder if their electrical bill is going to bankrupt them.
Well, it's either going to bankrupt them or it's going to bankrupt the city that they're in.
Right.
When does
Dude, that's the
Nvidia
thing.
run out of AI companies to vendor finance? I don't know, but I really wish they'd finance us. How's our
That'd be
AI
great.
model going? Do we have a chatbot yet?
No, it'll be in the next release.
Okay.
No, so Jensen will run out of people. Well, the show will stop when the mega caps stop absorbing the AI companies and bailing out the VCs who invested in these terrible companies in the first place. Like, I mean, you look at the companies that have already been absorbed. I think Stability AI, and I forget who the other one was. I don't remember. But anyway, Google and Microsoft and all of these places are literally just, well, they don't buy them out directly because that would look too much like monopolistic practices. So they just absorb all of the workers and then buy rights to the assets, but leave the company intact, the shell of the company intact. So essentially bailing out the VCs that invested in them. When that stops, that's when Jensen runs out of people to sell to.
I found an image of Jensen and his wife.
Oh yeah,
Yeah.
is she Stone Cold Fox?
I mean, she's his wife.
Oh, all right, yeah,
I would say they're equivalently attractive people.
yeah, they're well. They seem well matched.
Yeah.
There you go. That's cute. Those adorable people.
They've been together since college and they have 2 children. She
That's cute.
definitely eats the scrum.
God damn it, Kendra.
That's Jesse Eisenberg.
uh,
Oh god. Yeah,
how
so
did
we're
we
gonna get a
actually get
beat,
with
but it'll be
that?
interesting to
It's
see how they
terrible.
guide. Because I mean, at some point this show has to stop. People don't have an infinite appetite to just throw their money away. Oh, you want to hear an interesting thing? Anthropic, the people who make Claude, they want to start selling ads in their answer engine, right? Kind of like become a Google search competitor and want to sell ads. And the ad rate they want to sell at is like $50 per 1,000 impressions or something like that, which is like 5x even the high end of the industry standard. It's just so insane that I think it's just indicative of how much money these companies are burning. Like you would never ask for that unless either you had the buzz to support it, which you absolutely do not. They don't have the user base to support asking for that, or two, you need it to survive because what you're making is so expensive and produces so little money. And I think the second one is the most likely answer.
Yeah.
I mean,
So
yeah,
it'll be,
absolutely, yeah. They're trying to get the advertisers to subsidize their business,
I mean, yeah,
and
but
people believe that
it'll be
AI is
interesting to
going
see.
to
It's like
stand on
what
its own. Like, come
it'll
on.
be interesting to see what advertisers go for that because that seems like
Easy
why would
choice.
you ever do that? I don't understand.
Yeah, no, your cost of acquisition is 5x at that point, right? Which is ridiculous. Like, and you're trying to add that on to your conventional search, advertisement stuff that you got going on. I mean, and
I
not
think
only
it's
that, but
because the monopoly money from the mega caps is starting to run out.
Yeah.
yeah,
Yeah.
but I just mean like and so wait. So I just trying to wrap my head around this too. So advertisements are they going to be baked into the responses of the chatbot, or are they just going to be like those annoying ass windows on the side of the app?
I have no idea. I don't know. We'll find out, I guess, if someone
Because if
buys
it's
one.
the former, if it's the former, then I could see that being a huge problem for them. No one's
Yeah.
going to
Oh
use
yeah, for
a
sure.
chatbot that is just a giant shill.
I mean, nobody who really uses chatbots to actually learn anything anyway, right? Nobody trusts them. If you do, you're an idiot. You have to, and I did play with Claude a little bit, and like to their credit, their references or their citations to the internet seem to be better than ChatGPT in the sense that I didn't notice any that were hallucinated. They're like actual references, which is kind of nice. So I think I don't know. I mean, but I imagine that they'll be embedded in just like here's an example of this, blah blah blah, which this company sells a version of this, and you can get this here.
Right. Use promotion code PEANERGPT to get 10% off your next order.
I mean, peanut actually don't. I don't know if people know this. This is a pretty well kept secret, but I'll share it with you now. Peener GPT is a promo code that actually works on every single website on the internet. And
Try
actually, if you put that into our beta key box on our website, it will actually work. So if you're interested in getting it
God damn
started,
it, Jay Fresh.
You told them the workaround.
Don't worry that
Uh,
it doesn't meet all the characters. That's part of the trick, right? Nobody would guess a promo code that was not a complete set for the box.
You're
it's
such a
genius, really.
bastard. My entire existence is Peener GPT. So we're gonna talk about this week? Do you want to talk about how realized volatility is still massively higher than implied volatility, and this market desperately needs to just trade flat as fuck for like 30 days?
Yeah. Yeah, let's do it.
I
So
mean,
yeah,
Gonna pull
so
up.
realized vol is still massively higher. Well, at least on SPXW. I know HV is like 19, IV is like 12 and a half. On like the 30, and even on the 60, the spread's pretty rough. It's like 14 to 12.8, 14.6 to 12.8.
Yeah,
Um,
HV10's coming down pretty hard though. I mean, it's down to what, 12 now?
yeah, but the variance is even worse in the SPX contracts.
I mean, yeah, that's why I predicted perfectly flat.
Yeah, you were super wrong, but you were closer than me trying to be more bearish than you.
I mean, it's just yeah, it really. I should have said my tried and true guess that I haven't used yet, which is just up 40 bips for the week, because that's really kind of what this means.
But yeah, what kind of so we got economic data coming out. Let's see what do we got.
Bunch of shit.
Bunch of shit. It's always
Bunch of
something.
shit.
We got PCE,
Uh,
GDP, we got some auctions, which I don't think will have any significant impact outside of like intraday volatility. Maybe the 7 year and what do we have, the 5 year.
yeah.
Yeah, those are probably going to drive some intraday vol, but everything durables at the front half of the week. Durables will matter, especially if they're way the fuck up, right? Because that'll be inflationary and reduce the likelihood of rate cuts. That's tomorrow. So that could actually be pretty bullish into the midweek, and then we've got to see if GDP goes down like a rock. What are we gonna do if GDP is like sub 1%? Does everything just
Uh,
implode?
I don't know. It
no.
looks like they're expecting it to be 2.8.
So
Yeah,
I'm just
yeah.
I'm just gonna say this really quick. In 2023, the biggest green candle of the year was Nvidia earnings.
It's true.
In a year of perfect prints in the economic data, even some that were absolutely miraculous, even in that environment, Nvidia's earnings and guiding upwards and beating pushed the market up more than any economic event in 2023.
Well, Meta earnings were pretty impressive too for
That one was
2020,
big, but not as big as
2024.
Nvidia. When Nvidia went up 30% on that one fucking earnings,
Yeah,
and
that
everybody
was
got insanely bullish in tech at the same exact time. That was a truly insane move.
it
So
was.
so the biggest event this week, even with all this shit, GDP, fucking 4 week unemployment, all that crazy shit, I still think everyone's gonna just not give a shit and wait for Nvidia earnings in the equity market.
Yep. Flat till Wednesday. Then the CBOE goes down on Thursday.
Well, hold
Miraculously.
on. Now, what if Nvidia is flat on revenue and guides down? Then we get sub 2% GDP.
Ooh,
I mean, that would be
yeah, VIX back to the man.
a lot of fun. If their revenue was flat, oh my god,
So
just
this
that
is what I'm
alone.
gonna do for Nvidia earnings. I'm just gonna log VIX.
It
It's
might not
just
be terrible.
yeah, right. It can't be the
Uh,
like at worst I lose a little bit of money. At most, I get rich.
Maybe I'm gonna look at September Vegatooties. See if
Oh,
anything's cheap
okay.
enough.
Yeah. Yeah, VIX pricing's starting to get a little bit better. It still sucks, but it's better than it was like 3 months ago.
I mean, but like, how often do you think we're gonna get fucking VIX sub 13 for the rest of the year?
But 3 month VIX is not nowhere near that.
No, I know. That's what I mean.
Like, so, yeah, but you're buying 90-day contracts, right? Or
For
no, you're
September?
buying
No.
September. Okay,
Yeah. Yeah.
I see
I,
what
I
you're
mean, I
trying to
might
do.
have to buy some Vonitudes because I'm pretty fucking poor, but you know.
Yeah, you're gonna need this thing to fucking drop like 10% in a day.
Oh no, if you get like a 2% drop in a day, you can squeeze out of those with a decent like 60% or something like that. Like the really really cheap ones, they go up. It's not
Yeah,
like
yeah.
mind blowing, right? Because you're having to buy the Vana, and so you're really just picking up that sensitivity, and then you have to get the fuck out because if you hang on to it, it's gonna go straight back down. So, uh, but I might shop around. There might be a better one too. I have not looked in a long time.
Yeah, I've got a feeling that Nvidia earnings is going to break the market.
That would be fun. September
I
20th.
don't know which way.
You're out here trying to hit a 20x on VIX calls. I'm just gonna buy the first out of the money like next weekly that is 5 cents.
Dude, honestly, I see some contracts here that I'm kind of a fan of.
It's gonna be
Not gonna
like
lie.
a SEP for like $25. That's probably gonna have to be like a 30. Like a SEP for 30.
I'm
And
going
then
for a
just hope VIX opens Monday at 50. Otherwise I lose 3 cents.
If it does open at 50 on Monday, you can bet that you won't be able to trade your contracts.
Damn straight, yeah.
Oh, dude, some of these look pretty tasty. Not gonna lie. Like the 5,000 for September 20th, not too
Gold's
terrible.
looking good. Why does gold keep going up?
Because everyone has to buy it to hedge their shitty dollar positions.
It's true.
Yeah, I've been saying
Hmm.
that for a while now. I'm still long gold. I've been trying to trim
Me
it, but I
too.
can't find a good reason to cut any. Like, I'm like, okay,
Yeah.
gold's gonna get, like, someone's gonna sell this off, right? And I'm like, okay, I'll trim a little. And it pulls back, but then it just goes right back up again. Because the
I think
dollars.
owning gold is stupid, but I just hate owning the dollar, so
Well,
I
central
don't want to
banks
own
have to
anything
buy it
else.
to hedge off their dollar risk because they're all, like, balls deep in US treasuries.
Yeah.
They don't have a choice.
I don't want to buy anything else, so I
Unless
just
you're El Salvador.
gold.
And,
Yeah, I don't want to
yeah.
buy Bitcoin. Fuck that.
Yeah,
Gold's useful. Gold at least does something.
it's true.
I think it's
It's
stupid as a store of value, but it does actually do things that are important.
it doesn't corrode.
Mm, mm.
Hmm.
It hardly oxidizes, so it's a
Okay.
great interfacial material.
It's not that
It's
great of
also
a. I feel
biocompatible.
like it's oversold as a conductor, though. Silver's a better conductor,
So
right? But
it's not the yeah, but it's not the conductance that they care about. It's the oxidation, right? So you get a
mm.
good contact, right? Because the if you oxidize in your contact, then that becomes a big resistance.
So what you're
That's why
saying is
gold is
we should
important.
gold plate your peener for ultimate
Uh, to
ultimate contact.
just to stop peter oxidation, yes.
Yeah. Okay. It'll look so young if you like take the plating off in 30 years.
Mm, I don't know. I feel like it needs to breathe. It's like how you put a band-aid on and you take it off and it's all like wet and gross.
Yeah. Maybe you
Yeah.
should just wear like a gold sleeve on your peen at night.
I don't know. I've never thought about this. I'll have to think more about it.
I'm thinking about it a lot right now. Peanut
But I mean,
oxidation
you would
is a
have to be
real
able to.
problem for men over 50, right?
Wait, is this like a thing? Now I'm gonna have
Yes.
to look it up. Did Kinder say that? Because then it's not true.
No, Max Spires said it, so it might have some
Wait, wait,
validity.
wait, wait, wait. We need corroboration from our resident painter doctor on this.
Yeah, we should probably ask Dave.
Yeah, Dave is the person who really knows if painters oxidize or not.
Dave taught us about vasectomies with an on and off switch this week. You got like a little Bluetooth device, and you can turn your balls on and off.
Whoa,
Oh
Yeah,
yeah.
you can go into like baby
Yeah, I've heard
making
about those.
mode, or turn baby making mode off.
that's neat.
Yeah.
Well, until we hear back from him, I think the jury's out on
Hold
whether.
on.
What is he here?
Oxidative stress and arteriogenic erectile dysfunction, prophylactic
Boom.
role of antioxidants. It's in the Journal of Urology, which is the official journal of the American Urological Association.
All right. So my first
Um,
my first act as CEO is going to be getting us all custom fitted peener sleeves.
well, hold on. The study was in rabbits. Do you have a rabbit dick?
I don't know. I don't think so. But theirs are just smaller than human dicks, right? So the oxidative stress would just be greater over a larger surface area.
I don't know. You seem to know a lot about rabbit dicks.
Who doesn't? I mean, you're the
Looks
world's
like
foremost
you're.
expert on AI generated cat penises, so I don't
That's
know why you're
true.
trying to throw me under the
Uh,
bus here.
so it looks like pomegranate juice is the most effective for this problem.
So we need a pomegranate penis sleeve? Or
Yeah.
ingesting pomegranate juice. Hold on. Did they dip the rabbit dicks in pomegranate juice?
This is what I am looking.
Oh, okay.
I don't have access. I'll have to log into my VPN and for work, and I don't want to do that right now.
I'd love to see the studies JFresh looks at on his academic accounts.
I know, right? Like, I was just thinking if he got like audited and it's fucking just sitting there like, so you looked up oxidative stress, erectile dysfunction
In rabbits.
In
in rabbit.
rabbits. Yeah, let's say I was potentially going to write something, write a proposal for, some biomechanics stuff. I don't know.
I feel
Who
like you
knows?
could probably be like, I'm trying to make boxers that keep your junk cool. And
Yeah, we should.
that'd really free you to read as many papers on those particular subjects as you want.
I think people just don't care. It's
I care.
the Journal of Urology.
I want ball cooling boxers. Imagine your balls just never sweating again. This is the gift you could bring to mankind. It's up to you. I mean, you don't have to use your powers for good.
And I won't. Let's see. I don't think I can get this through the National Institute of Health. They should be able to show full text.
All right,
Why?
let's try to predict the market unsuccessfully again. I'm gonna go first because Dork won.
Because you're gonna go flat.
Well, no, I'm not gonna go flat. I'm gonna go flat until Thursday. Where's Thursday? Thursday at 9:30 a.m. and then I'm just gonna go up to 5,700 by the end of the week. And I'm predicting that because I want the opposite to happen. So I'm just gonna go long SPX and then long VIX Wednesday night at close. instead of just straddling SPX.
Okay. Can I go? You ready for this shit?
Yeah, gun it. I'm born ready.
Um,
Is it flat?
no, 15,700 by end of day Wednesday.
Ooh. All right.
Now, where does that put me?
5,500 week close.
Ooh. Spicy. So you're going Nvidia miss.
No, Nvidia's going to beat, but their guidance is going to be enough to make people.
Now I want to go up in the first part of the week. I'm just gonna do a straight line.
And also,
that
like,
sounds
so,
much
like SMCI earnings, like the people were really starting to grill them on shit. And so I'm thinking that even if Nvidia beats, people are going to grill real hard on their guidance, and they're people are no longer as willing to just take all of the bullshit at face value. So I'm really interested to see what the flavor of those questions are and how hostile they are.
interesting. Okay. All right, so we got you at 5,700 midday Wednesday, and then straight down. Dork.
Uh, you guys both took the good ones. What's 40 bips up from open?
40 bips up from open. Fuck you. I don't know. Like 56.
34.
It's like 75 or
Nope.
65.
34 times 1.004. 56, 56, 50.
Is that your final answer?
That is my final answer.
All right.
40 bips up from open. I did it.
Little bit of lettuce.
I do have some CTA information to back my bullish stance. Hold on. Where is it? So CTAs are at like net zero right now, but they're buyers on the flat tape, up tape, and down tape next week and over the next month. So they only become sellers on like a greater than one standard deviation move to the downside. In which case they are sitting on like they're sitting on a lot of equity that they can dump. But I think net buyers in most scenarios.
Well, I mean, I think what this looks like to me is the market's going to go up 40 basis points.
Nah. You know your current implied move is 147 basis points for 5 days.
Looks fine.
I
Yeah, it doesn't matter.
I assume they're the same one. SPXW is 1.07 and SPX is 1.47.
Hold on, I gotta turn on the stream so I can see what the hell I've just proposed here. Mine looks ridiculous.
Yeah, it does.
My move looks highly rational.
Here's the problem I have with yours, JFresh, is if you're right, I think it's just like this.
Yeah.
Yeah. But if you're not, it's just gonna go up.
Yeah. Either way, I can say I got half of it right.
That's true.
unless it's just super flat.
It is a delta neutral test on the monthly, so it's not. I guess it's not that bad. And it would be a return to the long-term trend, I think.
Yeah.
Yeah. All right. Yeah, I don't hate it. That seems like a fair. Like that's a slow drop. That's more like Nvidia. Yeah, that's more like Nvidia beats and then like guides flat. And
Yeah.
GDP is
Yeah.
okay, but not 2.8. Like so 2.4 GDP, Nvidia flat. Okay. All right.
Yeah. Let's see. What is GDP now saying?
Do any of them
Hasn't been
ever
super
agree?
accurate. It hasn't been super accurate lately, but oh, they're still at they're doing the third quarter. This is a revision to the second quarter, right? Coming up.
Yeah.
Although it keeps going down, it's down to 2% now. All right.
Yeah, this is the second quarter preliminary? No. Yeah.
Residential investments for the primary drop on the latest GDP Now print. That's interesting.
Hmm. Wow, GDP now sucks. Is that like 1.7?
It's two. The blue chip consensus is 1.7. It's always
Oh,
lower.
okay. Yeah, Atlanta Fed now estimates it too. What if GDP just goes to 0 by December?
What if GDP has already been basically
0
that,
for 2
and it is
years?
all actually just inflation?
Well, that's gonna be difficult for JPOW.
Well, the problem is that they can't disprove what I just said.
Nope, they can't.
They don't really know. But so far, they're really liking the data they're getting,
Is
even though
productivity
it's not
still
reliable.
flat? Of course it is. Or just increasing at the same rate as
But
inflation.
the thing that oh my god, it made me so giddy just looking at how stupid these economists are, or how biased they are, I should say. Not stupid. They're not dumb, but
Yeah, they are.
all right, you're right. They were looking at GDP or no, what was it? The jobs print where it was like minus 818,000.
Oh yeah.
They were just like, well, if we had such good GDP and all those jobs, there was actually a lot fewer jobs, then that must mean that our productivity increases were even greater than we thought. I'm like, yeah, productivity, that's probably it.
It couldn't be inflation. Inflation's always
We're all
2%.
it's just so matched. Look at how productive we've all become.
Yeah. Inflation's always 2%. I mean 3%. Or 4 sometimes, but mostly 3 and 2. And 2.
Yeah.
Yeah. If you imagine if all of your models just assume inflation is a constant rate.
Yeah, I don't know.
Of 2%.
I mean, it wouldn't be any worse than
I'd
the
be
models now. It would
yeah.
take a lot less work to calculate that too.
Yeah, it would.
Think about the man years that go into all of these calculations and estimations and keeping them up to date and doing them every quarter, blah
I
blah
mean, I
blah.
assume the Fed has
And how they
has a
literally
dork.
tell us nothing.
Does the Fed not have their own dork?
I don't know.
We could
A
offer
squiggle master?
yeah, maybe we could offer dork services to Claudia Som.
She's not at the Fed anymore. She just posted a double
Did
rainbow.
dork just leave?
I don't know. Claudia Som the other day posted a picture of a double rainbow,
What does that mean?
implying that I don't know, immaculate wonders are occurring.
Mm. Her Twitter page reeks of midlife crisis Karen.
Yeah, it does, unfortunately.
Yeah.
Anyway.
All right. Well, I guess
All
Dork
right. Well,
left.
Dork disappeared. So, and we
Yeah,
already gave our predictions.
I guess we just
And
wrap
my
it
kids
up.
are just randomly screaming, so I should probably go see what they're up to.
Yep. Yep. All right. Well, thanks for coming on, man. Appreciate it.
Yeah, no problem.
I'll thank Dork in the chat.
Don't bother. He's fired.
We're gonna rent him to the Fed.
Yeah, Squiggle Master.
All right,
Should
man.
put that
Okay.
on LinkedIn. All right, I'll see you, man.
I'll catch you later, dude.
Bye.
Bye. All right, guys. Do anybody have any questions? No. That's on AMSC. I don't really have any. I could take a look at it real quick, though. Yeah. See, it's got two things I don't like. Well, one, just the combination of American with superconductor. Um, and then also the word superconductor. Other than that, I don't know. Their earnings seem pretty good. Some decline in margins in the last quarter. If that were to persist, that might be kind of bad. Otherwise, it looks decent. Anyway, thank you guys so much for tuning in. I will be around for the rest of the day. If you have any questions, feel free to hit me up on the Discord, and especially if I didn't get to them during the stream, and I'll try to answer them. And I'll have Pickles picks out later for you guys. I hope everybody has a good night. See you.